Hey everyone, welcome to this week's webinar, weekly video. I don't even know what we want to call it anymore. But we're focusing on the theme on profiting on the recovery. And today we wanted to talk about how we know that there will be a recovery. And it's a stat that doesn't get reported in the media, but one we do follow internally relatively closely. And what this is, it's actually the gap between a freehold property and the price of a condo. So what has been happening over 2020 is you've had a lot of people rush to change their situations, which put stress on the market, which led to increased pricing. And you saw the growth in freehold pricing significantly, and it jumped different areas. But the freehold pricing, so that's your townhome, your semi-detached, your detached house, you saw a big jump in pricing.
It's great to look at the different segments in the market because oftentimes you hear the media reporting about overall performance. And that's really a general term and doesn't really look at the nuts and bolts of the matter, where the market really is made up of several different segments. You have the detached market, the semi-detached market, and the condo market. And each one of them performs slightly independently from one another. So for the detached Toronto market, so those in the proper city of Toronto, prices have increased now to $1.47 million on average. That's a 9% increase year over year. Semis were very similar performance. They're now, the average semi is 1.1 million, almost 1.2. That also increased about 9% year over year. Now, the different tale is the condo market. The average condo now in Toronto is 640,000. That actually dropped 3% year over year. And what's really interesting is if you look out into the broader GTA, into the 905, prices for condos actually increased almost 5%. So it really goes to show you the different segments, different markets within the broader market overall. Now, what Alex was saying is we wanted to look at the price gap to see how that's performed for the detached and semi-detached markets versus the condos. So at 1.47 million for a detached property, that's actually about 131% price difference. So a detached property is 130% more expensive than a condo is. And what's really mind-blowing is that gap has actually increased 24% year over year. And taking a look at semis, the gap there is about 81%. So a semi is about 1.1 million. So it's 81% more expensive than a condo. But the price gap here is 32% year over year. That means that detached and semi-detached Toronto properties have significantly increased in price compared to their condo counterparts.
And what we did is we went back historically. What happened when you saw these gaps grow? And what happens in the preceding year is the purchase price jumped significantly on the condo property. So what you end up when you get the gap growing on the freehold versus the condo, it becomes an affordability gap. And it can't give the people the money to buy the houses. They can't afford to buy the houses because the gap has gone up significantly on those properties. So what happens is you'll see a jump in the condo price to bring the gap closer together between the price of a freehold property and the condo. So it becomes a question of affordability. And it was amazing when we were brainstorming about that this week. I'm like, Kyle, like I have deja vu. I feel we talked about this. It could have been, well, probably 2018 we talked about this. It wasn't 2019, maybe it was 2018 where we were talking about this. I'm sure there's some videos we can find in the archive, but we talked about this gap. The affordability gap is condos is the only thing that people are going to be able to afford out there on the market. That is going to be their first property realistically, and it could even be their second property before they get to the freehold. So you got to look at that number. So if you've seen a massive jump in regards to the affordability, in regards to the ratios jumped 24% and 32%, that actual growth, these numbers are not the sustainable numbers. So what happens? The freehold properties aren't going down. The freehold properties don't go down. They'll level off. You'll have a leveling off of pricing because, okay, you know, we've hit a new plateau in valuations. Now we may sit here for a couple of years just because we have to wait for people can afford these properties. Remember, the freehold, deja vu again, freehold properties, they're not building any more of them in Toronto. There is no land to build more freehold properties. That number is actually decreasing because what you'll have is you'll have a whole section of freehold properties knocked down, and you'll put a more dense development like a condo building going in. And I can tell you specifically, even in my neighborhood, a developer just recently bought a whole block of houses and they're knocking them all down. It's on Campbell, just north of DuPont. Developer bought all the houses, those will all be knocked down. You'll have a more dense property. So your freehold property, decreasing supply in those. So we're not worried about pricing on those going down. They just will, the price growth will slow again. We just had a rapid buildup, price growth, it'll plateau. So now we got to play catch up with the condo values. So the condo values have to catch up. So that's where we've seen a deceleration in regards to the appreciation of the condos because what have we talked about? There's no reason for anyone to live downtown. Zero. But we know that's going to change. We've beaten that topic to death in regards to why it's going to change. So the gap has increased. So just naturally that gap is going to come back, and it's going to come back very, very quickly because it's the only thing that people can afford. Now, again, right before we chatted, one thing that will hammer down is if I'm buying a semi-detached property or a freehold property, if my average prices are well over $1 million down, do I need to put at least minimum down?
20%.
20%. You cannot get around it. You have to put at minimum 20%. And then remember, we have the double land transfer tax in Toronto as well. So that gets pretty hefty when you start getting over the $1 million price point wise, especially on the detached property. If you're getting into that 1.4, 1.5 range, your land transfer tax is now getting $40,000, $50,000, $60,000 cash. That's cash. Nope. Can you give a mortgage on land transfer tax?
Nope.
Nope. That's cash. Write a check. There you go. Boom. So now we're talking about 20% down plus a hard cash of the land transfer tax. So let's just do quick math on 1.4 for actually let's do the math on just $1 million. Kyle, can you
in 1 second.
what the land transfer tax is on $1 million?
$32,950.
We need $32,000 for the land transfer tax. We have to put 20% down, so it's another $200,000. Then with legal fees and everything like that, we're going to be getting 235 up to 240 round number, moving and other expenses you got to do for. So you're looking at probably you need about at least $240,000 cash by that $1 million. And I can tell you, Kyle, I want to buy a new semi-detached home for $1 million. What do you have for me?
In Toronto? Nothing.
Yeah, I just sold one. I just sold one. Just under $1 million, and it is a complete gut job.
Oh, okay. Sure.
Complete
For knockdown.
Complete. Basically, it's what you're getting. The normal individual is not buying that property. So in order to get a livable property, you're going to be realistically 1-2 on a livable semi in a decent neighborhood, at least 1-2 in a livable semi in a decent neighborhood in Toronto. Decent. Not going to say good, decent neighborhood in Toronto. Who can afford that? Where are you getting that again, 240 minimum on the $1 million, you're not getting anything of that. So you're going to need more cash than that. Where is that money coming from? Well, a lot of people aren't going to have that money. A lot of first-time buyers are not going to have that money. They have to buy condos. It's the only option for them. So what's going to happen when they all come back downtown? You're going to see prices jump right back up. You cannot buy the freehold property as your first. Again, unless you're getting parental help, unless you had stock options in a company that just went gangbusters in regards to the tech sector. You know, people don't have those down payments. So that's where you just with the math, you're going to have a jump in the prices for condos. Now, we are
just to add
Yeah.
to that, without the bank of mom and dad or some sort of extraneous
you see these.
income,
You see these.
yeah, bank of mom and dad, I would say, is 25% of transactions. So for the other 75%, we just break it down for a second. The average couple makes about 110 to 130 in Toronto. If the mortgage limit is 5 times that, your mortgage is 500-600. Well, guess what is in the 500-600 range? Condos.
Yep, you're gonna be buying a condo.
That's the entry point.
Now, people may be arguing, well, what if people don't go back downtown? Well, we brainstormed that a little bit because I said, Amit, how's the mortgage market doing? How's the lending market doing? Recap that conversation right now for everyone here, and I think it is an acute example of why people are going to be going back downtown again. So, Amit, how do you find the underwriting process? So underwriting for everyone, underwriting is when you actually go to the bank does its due diligence to make sure that you actually have the income you say that you have, your assets are actually valued at the assets you have. So Emmett, how's the underwriting process to getting people approved on mortgages right now?
So there's been no significant change from the bank's side in terms of how to qualify a client, what they need, etc. Pre-pandemic and post-pandemic. The only major change that's happened is a little bit more cognizant of, are people still working? Are they employed? Is the company healthy? But assuming all that is kosher, the only thing that's changed is timing. They're so busy that it's what normally took us 4 hours of turnaround is taking us 4 days. And that's because the banks are short staffed, or they have a skeleton shift, or somebody got COVID on the bank floor. And we talked about the collaboration earlier. If you need to get an exception, that's taking time. From a banking financing perspective, nothing has changed.
Yeah.
I believe October and November were the busiest months in banking history over the last decade. And you guys can correct me, but even the TREB numbers this October versus last October is higher. So pandemic October 2020 had more transactions than no pandemic October 2019. So it's busy. There's no shortage of transactions.
But the collaboration has severely been impacted. So back in the day when someone was working downtown in their underwriting office, where you need like, hey, here's the file. They ask a question, you answer that question, they need to go to their manager. They would just go like this. And they would ask their manager that was beside them, and you could quickly get the file done. Does that exist right now? No.
So, if again, we go back to an easy example. Someone needs 100 grand, but I need them to get 120. In the past, the underwriter, the main person you deal with, would say, let me check with the team lead. They would just turn and say, hey, John, would you do this deal? Okay, great. Click, 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 off it goes. Now it's like, I need to send an email. I got to find the team lead. They could be taking their kids to school. Maybe they're not working today. So what used to take seconds is taking days. And if there's a follow-up and the team lead says, well, can you find out if the customer has ABCD? So now that's another process to go back to the underwriter, has to ask me, then ask the client, then we go back, and then it's this complete disaster of timing. Like, my service levels are down, and it kills me because that's what we've built our reputation on. So but there's nothing I can do about that. The bank is operating 10, 15, 17 days delayed, and it's right in their portals. If you send us a deal, expect no answer prior to 8 to 10 business days, which is 2 weeks, which is completely unheard of. It's not the environment we're used to.
And what people have to realize, you have these massive institutions with their legacy systems that were built around collaboration within the office space, okay? We can be more efficient working on our little islands at home for certain tasks. But we've talked about it before, that this starts to break down when we start missing on the collaboration opportunities for the advancement. You're missing all the collaboration opportunities. And we're just telling you the story Because here's an exact example of where collaboration is breaking down, and it's actually taking significantly longer to get things done because people are not in their offices to allow for the collaboration to get deals done. So that's where you're missing out on things. Another reason why we know people will go back to the offices, but we know that Amazon just released another 100,000 square feet of office space in downtown Toronto. That just happened last week. Even the tech companies know that there is a collaboration aspect to get work done. There are certain things you can do better when you're home alone, 100%. But on the other end, you need the collaboration to push it to advance yourself forward, and that's where we're getting in certain stages of industry. I remember when I needed to switch, or I wanted to switch, I didn't even do it because it didn't make sense. I wanted to switch my daughter's RESPs from within the same institution, from one account into another account. They told me it was going to be 2 months. 2 months to move that within the same institution from one to another. It's just because everything had to be done paper. Everyone was out remotely. They did systems in place to allow that to happen seamlessly in today's environment. So you have these massive legacy institutions. They can't change your systems overnight. The amount of investment they'd have to do is significant, and then you have all these people in their islands to try to change these systems from their islands. It is incredibly difficult. That huge opportunity in regards to that, in regards to new players in the industry coming up, and your Wealth Simples and everything all along those lines. There is opportunity within the legacy systems, and you'll see a rise in that, but it doesn't happen like that for these massive institutions. So that's where you
just going back to that, like the only silver lining, I'm not saying anything positive with COVID, but the only silver lining was everyone got a chance to reset, reboot, catch up on all their admin work that had been pending for months or years.
Yeah.
I'll give you an example. One of my friends is a personal injury lawyer, and he said he's been the busiest he's ever been because all the adjusters that had hundreds of files that they couldn't get to, they're settling them all because they have nothing else to do but work on this. So the same thing is happening in all these big companies that finally had time to catch up, but it's been enough time. They've caught up. Now there's nothing to do. And that's where the collaboration is missing. So to add on to your point, yeah, without collaboration, you just stay stagnant.
And I'll also add another. Kyle and I are looking to bring someone new in, and we're discussing individuals. And I said that individual has to literally be beside me because I need to transfer my consciousness to them, and the only way I can do that is if someone's right beside me. It's great to have an online meeting and we'll set an agenda and we'll discuss things, but the genius, but I shouldn't say genius. Creativity doesn't follow a timeline. Creativity isn't waiting at, okay, it's 11:30, we're meeting time, so let's turn on the creativity button. It doesn't work that way. Creativity comes in sitting there thinking, pondering, and then when that idea comes, and Kyle experiences with me, I'm like, sorry, I have to call you. I have to tell you this because it popped in my head. So you need to have those people to help then collaborate with the ideas, and then once the idea comes and then to foster it and brainstorm it and build it up, you need that collaboration. It doesn't follow a schedule. It's not human nature for it to follow a schedule. So that's where you need the collaboration and people being together. So it's interesting where you go from one topic to another topic, but I just always want to hammer down that people are going to come back and they're all going to work together. It 100% is going to happen. And how we know condo prices are going to go up from because we like to statistically back when we make these comments. So we've seen the prices go down in condos, we've seen the freehold prices go up, but the actual growth in the affordability between these freehold properties, 24% on detached, 32% on semi. And why it's because semi is the more affordable product than the detached property. Detached average price is well over 1.4. So the semi is your more affordable option, and you've seen that gap grow even more. So condos are going to be the only option for people moving forward. Once the downtown opens back up and things get back to normal, then poof, you're going to see prices skyrocket again. It's in the math. It's in
Whatever that entry level market is always remains constant.
And you know, we'll also add, and Kyle and I've been discussing this. What are you noticing on the market? It's basically the bottom's already happened in regards to pricing on the condos. Would you agree, Kyle, for what we're seeing out there?
Yeah, definitely seen price stability quite recently. So yeah, definitely not seeing steep discounts, no liquidations, anything like that happening.
Because what's happened, you probably bought it out in end October, early November. That's when there was a lot of uncertainty, and the investors were like, okay, you know, the early investors like, you know, this looks like a good opportunity. I guess they're jumping it. And then now why you have price stability is because now all the investors are like, you know what, I'm seeing opportunity. So if a good product comes out, there's an investor out there currently right now that is going to snap it up. They're going to buy that property. So you're not going to see a big drop in pricing anymore. We've already hit that level because the investors are out there to stabilize the pricing. They've hit where they some people have seen bottom. So again, snap up, snap up. I did, what was it, about 2 weeks ago, Kyle? Mm-hmm. All those condos are gone.
Oh, wow.
Right? Yeah. No, I think they all are, right? They're all sold?
Yep.
Yeah, all the properties I recommended, all sold. All sold. And we're waiting for final, that'll be a good video. We're waiting for final prices. We'll see if the prices are higher. I know for one of them, it's definitely much higher. Once the prices are all finalized on those, we'll then recap and show you how much those sold for. And I think some of them sold for more than what I said, the recommended purchase price. So that just shows you it's bottomed out, and it happened faster than we thought it would. But there's still huge value in buying it because the gap has grown. You know, the gap has grown. Yeah. And
it's not even just the investors, Alex, even the home buyers themselves. You know, no one jumps right into buying a house if they haven't rented. Renting is traditionally your first step. You get comfortable with the market, see where you are, get stable in your job, and then you look to purchase. So those people that were in the home buying category were actually the least likely to be affected by the pandemic. They had good jobs, didn't see a lot of downsizing, and were earning good incomes. Plus, right now, they've probably gotten a deal on rent. You know, they're saving significant amount of money. $400 or $500 discounts in rent we've definitely seen. Plus, interest rates are at historical lows now for these people. So people that might have been priced out of that condo market that were renting now can afford that condo or property. And despite the pandemic, Canadians have actually been saving more than ever. I think we're at historic saving rates right now as well. So all these people that were renting are going to start to convert over into buying the condos as well, because it's the only affordable thing, and they can now afford those properties too. So it's kind of the perfect storm of events that are coming into play.
Like, here's, if you're a parent watching this right now, buy a condo for your kid. Like, just buy a condo for your kid right now. If you have a kid that's in their early 20s, just buy them a condo right now. You'll make $100K in that in a year. It's if you're a parent and you have a kid that you can plop in the condo, that means you can go beyond the 2018 properties that we recommend. That means you can buy a 2017, 2016, 2015 property. You can play in that market because you don't have to worry about getting stuck at a low rent because you're going to put your kid in the rest of the school there. So any parent out there should run and buy a condo right now because this is a deal you're waiting for. Otherwise, we're going to be telling you, okay, you're going to call us up. Well, I'd like a one bedroom for my child. It could be like 600,000. Well, next year, it could be next year. It could be 2022. But we're already. I expect this to bottom in the spring. It's already bottomed out now, and that's where we're seeing things. The markets react quicker and quicker and quicker. You know, the government stabilization has worked. It worked. You may have seen sharp drops on certain things, but you've seen very, very quick recoveries on that. I'll have people buying properties and they're just buying it with cash. And what I mean by cash, it could literally be cash, or they could have set up a line of credit on their property, and they're like, hey, you know what? I have my properties went up in value. We've talked about freehold properties that went up in value. So my house went up in value. I basically have no mortgage on it. So I'll just buy a property. I'll just write it on my line of credit. $500,000 is my property. I'll figure out the financing on it later. Let's just lock this thing up and put the person in. So
just to capitalize on,
yeah.
on Kyle's comment, saving rates have gone up from 5% to just under 30%. So if the average person makes 100 grand as a family, average household, if they had 5K in the bank at the start of the pandemic, the average is that they have 30K in the bank. Like, these are significant numbers. And it's gonna flood the market with cash and opportunity. I think it's gonna be a busier 21 than any year before it.
And in another chat I was in, and it was in the news today, and maybe it'll be our next video. We'll dive deeper in it. But Bitcoin, when it jumped in value yesterday and today, it's at record highs. And someone was like, "Oh, like Bitcoin, I don't understand it." All you need to understand is that gold traditionally was a wealth preservation tool and an inflation hedge. So when you had inflation concerns hitting the market or recessionary fears, you see the price of gold go up. That happened this year. You can check the charts. But also, it's a hedge against inflation. That's what Bitcoin is becoming. I'm not advocating buying Bitcoin or running Bitcoin, but I'm just explaining the philosophy behind it. It's people looking for wealth preservation and inflation hedges. So you've seen Bitcoin go up, obviously, because of the wealth preservation side of it, but also now a potential for an inflation hedge. You know what also is an inflation hedge? Real estate. So
just to talk about Bitcoin, it started at $1. It went to 19,018 when everybody got a flurry of it. It crashed down to about 8,000 at the start of the pandemic, and as of this morning, it's at 31,000. A new record.
31 now.
I'm looking at it right now. 30,107.
Wow. Again,
right now at this exact second.
Not advocating anything Bitcoin, not educating you on Bitcoin, but
it's just another monetary measurement used in the world. It's like the Federal Reserve or Bank of Canada. It's a bank that's owned by the people of the world because there's no government that controls it. So it's just as secure.
Correct. So
that's what it is in a nutshell.
Exactly. And why I reference it. So we'll do a video on that, but we'll just talk about using real estate as an inflation hedge in regards to if you're having inflationary concerns. Again, we talked about the stabilization packages the government's put out and record debt levels for governments. So that stimulus is being input in the economy. So if you have a rapid recovery level, that means you're putting more pressure on the economy in regards to if everyone wants to buy bread, but there's only a fixed amount of bread, then the price of bread goes up. And that's what inflation is. So that's where real estate becomes an inflationary hedge. If the price of goods starts to go up, that means more revenue is coming in for the companies. That means salaries start going up. If salary starts going up, that means people pay more for real estate and more for rent. So you actually have the corresponding increase in regards to valuations on the properties, but that growth is leveraged. And that's where you have a larger growth level in the value of real estate. So that becomes your inflationary hedge. But we'll get more into that next video. I think as I go down this rabbit hole, we should start wrapping things up.
I mean, just to talk about inflation for a second, whether if you can't grasp it on a house or a condo, think about a PlayStation 5 or Starbucks coffee or whatever. Limited supply, high demand, something that should be $600 is going for $1,000 on eBay. So it's any product in the world that has more people chasing it than what is available. And that's exactly what housing is. So it's actually what it is.
I want to add one more point on that and then we'll go. Also, you have to, so we're talking about real estate inflationary hedge, which will be the next topic. We'll dive deeper into that. But on a very, very high level, interest rate, historic lows. So if things are going up, the government tries to keep a 2% inflation level. But if things are going up higher than 2%, but you've locked in your cost for sub 2%. So you have a sub 2% cost because your mortgage rate is historically low. Then you have things going up in regards to pricing wise. Remember, condos also went down, but condos will benefit from any inflationary pressure eventually. So this is the perfect time. It's down, but if you have inflationary pressure, it will go up. You're able to lock in your pricing sub-inflation level, but your tool to fight inflation is actually interest rates. But again, governments are going to be hamstrung by the fact that they can't increase interest rates in the short term, 2023, because of how fragile the economy. So you benefit from an inflation jump in a real estate hedge product, because the typical tool the government uses to fight inflation is unavailable for them to use.
Correct. And they have to offset the Canadian government alone has to offset $200 billion of debt they've taken on. And so the only tool available is inflationary increase of the assets to offset the debt. And we can get into more of that in another conversation.
That's exciting. I'm going to see if I can bring in one of my old economics professors in to talk about that, and we'll get into detail, because yeah, we need an expert for that. We need an inflation expert. I'll find an inflation expert. Okay, guys, we're definitely going far, but this is relevant stuff that you need to know. This is not stuff you're reading in the headlines in the paper. You gotta go down to the statistics. You gotta look at the math. You gotta look at where we're going. That's the important thing. We'll stop off here on that. Thanks so much for taking time to watch this video. Again, if you're looking to borrow, we got Amit below. And if you're looking to invest, reach out to Kyle and I. We'd be happy to talk with you guys. Okay, talk soon, everyone.
Thank you.
Bye.